All right, Scott Shellady, the cow guy here. First question is, are you out of your yen carry trade?
Well, I'm happy I never got involved with it. But I don't think that's over. By the way, I know that the market wants to brush everything under the rug very quickly. Nothing to see here. Please move along. But I think that was a little bit of a warning shot. I still think we're going to see volatility, actually a lot of volatility, and I think that whomever's going to be the president on January 1st is going to be given a big hot plate of warm you know what to manage going into 2025.
Okay. All right, let's go a little bit shorter term here. I'm sure you've been sitting on pins and needles for the Jackson Hole speech at 10 o'clock for Mr. Powell. What a bunch of nonsense here. I guess a quarter, a half, or whatever. I'm the only one that thinks we don't need an interest rate cut, but whatever. Just anticipation, dovish, hawkish, nothingish, all the ballyhoo about the Fed and Jackson Hole today.
Well, they've painted themselves into a corner, haven't they? I mean, you've got part of the market, or I would say a large part of America, that believes that they already feel like they're in a recession. So they maybe would benefit from starting to cut rates. But at the same time, I've asked anybody that wants to come on my show, I'll pay their airfare and their hotel to come in and explain to me how cutting rates is going to help inflation go lower. So they're in a damned if you do, damned if you don't. If they cut rates, they're going to have an inflation problem. If they don't cut rates, they're going to have an American story problem. On top of that, the reason why we haven't been in an official recession, because an NBER has not been able to label one. We had 2 quarters of negative growth, but they didn't want to do anything about that because that would have hurt the current administration back in 2022. But we've had government spending hand over fist. We've basically spent our way out of not having a recession. If you look at those jobs numbers month over month, the government spending has kept us out of a recession, and that's it. But then we've come to learn a couple of days ago that we can't even do that right. We got ripped off because all the money that we've been spending to keep ourselves out of a recession, apparently we bought 818,000 jobs that actually weren't there.
What?
Yeah.
What is this?
Yeah. The BLS came out with their revision saying that from last April to this March, they overstated their jobs numbers by 818,000. So that's a huge revision, the biggest one in the last 15 or 16 years.
How does that happen? How does that happen?
Well, I mean, how does it happen that we have continually month over month a headline beat, but then the last 2 months get revised lower? That also flies in the face of, wow. I mean, that's like we're talking 4 and 5 sigma stuff. Like it just doesn't happen. Yeah. So we got ripped off. We've been spending money to stay out of a recession, and we bought 818,000 jobs that were absolutely fictional. So I look, I'm bearish on what the economy looks like here. But I am bullish on, I think that, artificial intelligence is here to stay. I think there's some good things out there, but that doesn't mean we can't go lower for a little while here and maybe even go sideways. And my last thing I'll say is this, I had all the licenses myself for my entire life, to sell stocks. I've been a stockbroker, commodity guy, income guy, fixed income guy. But what I don't like, what I'm seeing now from 2008 forward, if you go back and take a look at the S&P going back to, say, 1970, there's a clear line, a demarcation line in 2008, 2009, where you can see the Fed becoming ultra accommodative. And it seems like now, and I guess 3 weeks ago, whenever that was, the hiccup we just had 2.5 weeks ago, it just seems disingenuous to me that every time we see a decent sell-off in stocks, everybody comes out of the woodwork calling for the Fed for an emergency 1% rate cut. Yeah. The Fed's got to rescue us. Why? I mean, if the Fed's not going to let the market go down, this is a rigged game. I mean, I would love to go back to be a stockbroker, because if you come into my office and say I've got a 3-year time horizon or longer, I'd say just put it in the market. The Fed's not going to let it go down. Commodity guys have to worry about markets going down, and I would argue even say sometimes interest rate guys do. But with the Fed coming to the rescue all the time for the equity guys, it smacks of disingenuous, and I don't like it. So whenever they change that tune, which I don't know if they ever do, but they have to come to, you can't continually screw with the laws of nature all the time, because ultimately it will come back and boomerang back and hurt you twice as bad had you just let the market do what it's supposed to do, because they're continually trying to manage an outcome, and it's not going to work. So, at some point in time, we have to come and pay the piper. But right now it's, put your money in the market, because they're not going to let it go down.
It's short-term gain for long-term pain.
Yeah.
I mean, this is really what the Fed, this is really what everything is, our administrations, and it's not just the Dems, it's obviously the
Oh, it's
Republicans.
both. Yeah, I agree. It's not. I mean, it's not. It's apolitical. I mean, and fellas, look, we can't. I talk about it all the time on my show because it's the biggest thing that nobody talks about. That's our debt, $35 trillion. We're going to have
Crazy.
we have a $2 trillion budget deficit, annual budget deficit. And so just the reason why we don't talk about it is because people can't imagine what $1 trillion is. They hardly can imagine what $1 billion is. But if I said it to you this, if you would have spent $1 million every day since Jesus Christ was born, you would not have spent $1 trillion yet.
It's unbelievable when you say that.
I know, and it's like 700, whatever, 750 billion. So we're 35 trillion in debt. If a second is $1 on a clock, 1 trillion seconds ago was 31,677 years ago. I mean, it's mind-boggling, and nobody cares because at some point in time, we're not going to be able to sell our bonds, and interest rates are going to go through the roof because of it. Just saying.
Wow. And then just how long is this? Like, again, this is where interest rates have to eventually come back down too, because the debt's so high, they won't be able to service the interest payments.
Right. Well, wait.
Like we're
we've crossed that threshold, the Rubicon of we're starting to print money just to pay the service on our debt, not even the principal. We're printing money to pay the service on our debt. And our service on our debt will be the biggest line item in our budget next year.
It's sickening, really, when you think
I mean, it's farcical, but nobody wants to do anything about it because it's unelectable. You can't make it to Washington saying we're going to stop spending and I'm going to trim back your entitlements. That's just not electable.
So Scott, you said you mentioned, you think AI is here to stay.
Yeah, I do. Yeah.
How are you playing this? So you buying NVIDIA? Are you?
Yeah, you want? You got to. Yeah. Well, I haven't bought it yet. I missed my opportunity. I wanted to get it below $100. But when I got,
you had about 1 hour there that Monday morning.
Well,
was that under $100?
That's me being too much of a trader, right? I got too cute for school on that one because I thought, well, it went down to 90 so quickly. Here we go, right? I'm 70 bid. Come to Papa. Well, it didn't quite work out like that, but it doesn't mean that's over yet either. You'll be able to pick those things up. I mean, there's going to be a time where we start to run a little long in the tooth when it comes to AI, but it's still going to be a great place to invest. And I still love the American ingenuity and our tech sector. It's going to be the leading. I lived in London for 16 years. Our tech sector is the envy of the world. So those things are going to be safe plays. You just need to buy them on dips and get good prices for them and hold on to them for a long time. And again, as long as you have a 3-year time horizon, the Fed's going to be in your back pocket too. They're going to help you out.